The average directional index, ADX, is a technical analysis indicator that is used to measure the strength of a trend. Here's how to use the ADX indicator in the stock market. Look for the trend direction. The first step is to identify the direction of the trend. This can be done by looking at the stock price chart and identifying whether the trend is up, down, or sideways. Calculate the positive directional indicator, plus DI, and negative directional indicator, DI. The next step is to calculate the plus DI and DI lines. These lines are used to determine the strength of the trend. The plus DI is calculated by taking the difference between the high price of the current period and the high price of the previous period. The DI is calculated by taking the difference between the low price of the current period and the low price of the previous period. Calculate the ADX. The ADX line is calculated by taking the moving average of the difference between the plus DI and DI lines. Interpret the results. A high ADX reading indicates a strong trend, while a low ADX reading indicates a weak trend. Traders can use the ADX indicator to help identify when a trend is beginning or ending. For example, when the ADX line crosses above a certain threshold, it may indicate the start of a strong uptrend, while a cross below the threshold may indicate the end of a trend or a period of consolidation. It's important to note that the ADX indicator does not indicate the direction of the trend, only the strength. Therefore, it's important to use other technical indicators in conjunction with the ADX to help identify potential buying or selling opportunities.